Automotive trends move faster than many people realize. A brand new SUV that shines under the showroom lights can feel outdated in just a few years. For some models, this rapid decline in desirability translates into staggering losses in resale value. While depreciation is expected with any vehicle, certain SUVs stand out for how dramatically they shed their worth. What started as six-figure luxury status symbols or cutting-edge electric crossovers often turns into listings on used car websites, priced at a fraction of the original sticker price. Today, we're taking a serious look at 15 SUVs across categories: high-end luxury, performance, hybrids, and mainstream models that lost their value far quicker than the average vehicle. The goal isn't to bash these SUVs, but to understand why they've depreciated so aggressively, what this means for buyers and owners, and what lessons can be drawn from their stories. Let's break this down into categories to see which SUVs have been the fastest to lose their value. Number 15. Maserati Levante. The Maserati Levante entered the SUV game with all the drama and elegance you'd expect from an Italian luxury brand. Sleek curves, a throaty exhaust, and that trident badge promised exclusivity. On the surface, it looked like the perfect rival to Porsche and BMW. But dig deeper, and things don't shine as bright. Owners quickly realized the Levante came with quirks that weren't so charming. Unreliable electronics, inconsistent build quality, and a dealer network that couldn't match the coverage of its German competitors. Then comes the sting of ownership costs. Routine maintenance could drain wallets faster than the Levante drains a fuel tank, and surprise repairs only added insult. But the real eyebrow raiser is depreciation. Over 5 years, the Levante reportedly sheds around 74% of its original value. That's one of the sharpest falls in the luxury SUV world. For the first buyer, it's a nightmare. For a used market shopper, it's practically a jackpot. And while the badge carries prestige, buyers have grown cautious. They're often enticed by more reliable options that blend performance with practicality. The Levante's appeal ends up being more niche than universal. That makes it a fascinating case in the SUV market, an exotic name that couldn't quite deliver staying power. Today, it's a reminder that heritage and design flair alone can't guarantee long-term satisfaction or solid resale value. Number 14. Cadillac Escalade, 2019 models. The Cadillac Escalade has always carried the aura of American luxury with a bold, unmistakable presence. The 2019 model continued this tradition: massive proportions, chrome-heavy styling, and a powerful V8 under the hood. For buyers, it was a rolling statement piece. However, the resale story hasn't been quite as commanding. Within 5 years, the 2019 Escalade lost nearly half of its value. That's a dramatic drop for something marketed as timeless luxury. One key reason lies in Cadillac's rapid evolution of design. The latest Escalades arrived with refined interiors, massive OLED displays, and modern tech features that instantly made the 2019 model feel like it belonged to a different era. Luxury buyers tend to chase the newest upgrades, so even a well-kept 2019 quickly looked outdated in the shadow of its successors. Another factor is fuel economy, or the lack of it. The thirsty V8, while fun on highways, came at a time when efficiency became a higher priority for many families. Combined with rising fuel prices, its appeal narrowed. On the used market, the depreciation creates opportunity. Buyers can scoop up a fully loaded Escalade at nearly half the original sticker price, making it attractive if you're willing to accept dated tech. But for original owners, watching values slide has been frustrating. The 2019 Escalade is proof that prestige doesn't always equal staying power, especially when a newer generation redefines expectations almost immediately. Number 13. Lincoln Navigator, 2022 model. The Lincoln Navigator has carved out a reputation as one of the smoothest-riding full-size luxury SUVs. The 2022 model doubled down on comfort, with plush interiors, a commanding road presence, and a strong turbocharged V6 that proved Lincoln could rival Cadillac and even European players. Buyers initially praised its elegant cabin and thoughtful features. But depreciation has a way of humbling even the most luxurious rides. Data shows the 2022 Navigator retained only about 55% of its value after 3 years. That's a steep decline for a relatively new vehicle, especially one positioned as a flagship. The culprit? Consumer preference for the freshest designs. Shoppers in this market segment rarely settle for last year's look, when newer options with updated tech and refreshed styling are available. Size also plays a role. The Navigator is massive, which appeals to some but limits its practicality for others. Add in the reality of heavy fuel consumption, and demand shrinks further. In a market leaning toward efficiency, the Navigator feels a bit misaligned with broader trends. For buyers in the used market, though, this rapid depreciation is almost a gift. You can step into a nearly new Navigator for far less than the original sticker price, enjoying luxury without the premium hit. Still, for Lincoln, the numbers highlight the challenge of balancing prestige with long-term value, even when the product itself impresses. Number 12. Infiniti QX80. The Infiniti QX80 is a bold statement on wheels. With its imposing design, strong V8 power, and spacious interior, it caters to families who want comfort without sacrificing capability. On paper, it should be a strong contender among luxury SUVs. Yet, reality tells a different story. The QX80 has consistently lagged behind rivals in technology updates and styling evolution, creating the sense that it hasn't kept pace with changing buyer expectations. Luxury shoppers often want the latest features, from advanced driver aids to futuristic infotainment systems. The QX80, while comfortable and powerful, has felt dated in comparison to fresher offerings from European and American brands. This lack of modernization affects buyer perception, which directly influences resale value. In fact, some model years of the QX80 have ranked among the worst performers for depreciation. Owners face the double burden of expensive upkeep, common in this class, and limited demand in the used market. That hesitation stems partly from Infiniti's broader struggle to position itself as a true luxury leader rather than an alternative. Despite this, the QX80 still holds appeal for those who prioritize durability and space over cutting-edge tech. On the used market, it becomes a bargain for buyers who can look past the depreciation curve. But, from an investment perspective, it shows how failing to evolve quickly in the luxury space can leave even capable vehicles struggling to hold their ground. Number 11. BMW X7. When BMW unveiled the X7, it was pitched as the crown jewel of its SUV lineup, a massive three-row machine designed to blend luxury with the brand's sporty DNA. The exterior carried BMW's bold kidney grills, while the interior offered advanced tech, premium materials, and a cabin ready to rival anything in the segment. At launch, it seemed like the perfect formula, but time has proven otherwise, at least in terms of holding value. Depreciation has hit the X7 hard, with older models dropping sharply despite their short time on the road. The issue lies in the expectations of luxury buyers. In this space, the smallest design refresh or newest tech addition can instantly make prior models feel less desirable. Shoppers want the latest, and BMW's rapid cycle of updates hasn't helped the X7's resale stability. Maintenance is another factor. With so much complex technology crammed into the vehicle, gesture controls, advanced displays, and intricate suspension systems, the cost of ownership can escalate quickly once warranties expire. That reputation for pricey repairs makes used buyers cautious, further pushing down resale values. Yet, the X7 remains an enticing option for those eyeing the second-hand market. With steep markdowns, buyers can access BMW luxury for a fraction of the original cost. Still, the depreciation story of the X7 underscores how even a prestigious badge can't escape the challenges of balancing innovation, maintenance, and long-term desirability. Number 10. Alfa Romeo Stelvio. The Alfa Romeo Stelvio burst onto the SUV scene with Italian charm. Sharp lines, athletic handling, and a personality that stood out in a crowded segment. On the road, it lives up to the brand's reputation for engaging performance, delivering driving dynamics many rivals can't quite match. However, as exciting as it is to drive, ownership has proven to be a mixed experience. Depreciation data paints a clear picture. In just 3 years, the Stelvio loses about 51% of its value. That kind of decline puts it firmly in the danger zone for anyone buying new. Used buyers, while tempted by the stylish design and performance credentials, often hesitate when it comes time to commit. The main concern? Long-term dependability. Alfa Romeo has long struggled to shed its reputation for questionable reliability, and lingering doubts about parts availability only reinforce buyer caution. Another hurdle is the brand's smaller dealer network, which simply can't match the reach of more established luxury players. For many potential owners, the idea of having to travel long distances for service makes the Stelvio less appealing. Still, for enthusiasts who value driving excitement above all else, the Stelvio can be an underrated gem on the used market. It offers a unique blend of style and handling that's hard to replicate. But as far as resale strength goes, it's yet another reminder that emotional appeal doesn't always translate into financial stability. Number 9. Jaguar F-Pace SVR models. The Jaguar F-Pace SVR is the kind of SUV that turns heads and raises heart rates. With a supercharged V8 tucked under the hood, it offers explosive acceleration and a soundtrack that makes every drive feel like an event. On performance alone, it has plenty to brag about. But when the conversation shifts to resale value, the story is far less thrilling. Like much of Jaguar's lineup, the F-Pace SVR faces steep depreciation once it leaves the showroom floor. High-performance trims often attract a specific kind of buyer, which narrows the potential audience in the used market. Add in the reality of hefty running costs, fuel, insurance, and maintenance, and interest dwindles further. Once the warranty clock ticks down, buyers grow wary of potential repair bills, which aren't known for being budget-friendly. Depreciation data shows the F-Pace SVR sliding down the value chart faster than most rivals. That's disappointing given how much character it brings to the table. Jaguar as a brand has struggled with this issue for years, and despite the SVR's thrilling performance, it's no exception. For second-hand buyers, though, this can be an opportunity. With prices dropping quickly, enthusiasts can grab a high-performance SUV at a fraction of its original cost. The catch is accepting the risks that come with ownership. The F-Pace SVR proves that raw performance alone isn't enough to protect a vehicle from the relentless march of depreciation. Number 8. Range Rover Sport. The Range Rover Sport carries undeniable prestige. For many, it's not just transportation, it's a status symbol. With its refined, luxurious, powerful engines and a luxurious interior, it's easy to see why it commands attention. But prestige often comes with a hidden cost, and in this case, that cost is rapid depreciation. Within just a few years, the Range Rover Sport can lose a significant chunk of its value. The reasons are fairly consistent: steep purchase prices, a reputation for reliability concerns, and eye-watering maintenance bills. Potential used buyers approach with caution, knowing ownership could bring unexpected expenses. That hesitancy naturally drives resale values downward. Another factor is the pace of new model introductions. Land Rover frequently updates technology and styling, making older versions feel dated much sooner than owners would like. In the luxury SUV market, dated can be the kiss of death for resale. Despite this, demand hasn't disappeared completely. There's still a loyal following that craves the blend of off-road capability and urban luxury the Range Rover Sport provides. On the used market, it becomes a tempting bargain for buyers willing to overlook potential headaches. For original owners, however, the depreciation curve is less kind. Watching such a premium purchase drop in value so quickly can sting. The Range Rover Sport remains an icon, but it's also a textbook case of how reputation and upkeep costs can weigh heavily on resale. Number 7. Audi SQ5. The Audi SQ5 was designed to inject some performance flair into the brand's popular mid-size SUV. It succeeds on many levels, offering sharp handling, turbocharged power, and a cabin filled with premium touches. It's the kind of vehicle that balances everyday usability with the excitement of a performance badge. But when it comes to holding value, the SQ5 faces challenges that its more mainstream sibling doesn't. Depreciation hits the SQ5 harder than the standard Q5, and there are a few reasons why. First, high-performance trims typically attract a narrower audience. Not everyone shopping for a mid-size SUV wants or needs the extra horsepower, meaning demand in the used market is smaller. That limited buyer pool naturally accelerates depreciation. Another factor is luxury buyer behavior. In this segment, many customers jump quickly to the latest model, chasing the newest tech and incremental performance gains. This constant turnover leaves older SQ5s sitting on lots longer, which pushes values down further. Running costs also play a role. Insurance, maintenance, and fuel consumption are higher compared to the standard Q5, making long-term ownership less appealing for cautious buyers. That said, depreciation does create opportunity for savvy shoppers. A used SQ5 can deliver a lot of performance and luxury for the money, especially when purchased a few years old. Still, its resale story shows how even a well-rounded, enthusiast-friendly SUV can struggle to keep up in a fast-moving luxury market. Number 6. Lexus UX 300e. Lexus has built its reputation on reliability and long-term value, but the UX 300e is a rare exception to the rule. As Lexus's first all-electric model, It carried plenty of promise when it launched. Buyers expected the same durability the brand is known for, paired with the efficiency of an EV. However, the UX300EE quickly showed its limitations. One of the biggest issues is range. While competitors arrived with impressive numbers, the UX300EE offered a relatively modest driving distance, which instantly put it at a disadvantage. Add to that charging speeds and features that fell behind newer rivals, and suddenly the once cutting-edge Lexus felt outpaced. Depreciation reflects this reality. Unlike traditional Lexus vehicles, which are famous for holding value, the UX300E loses ground much faster. Used buyers often view it as outdated when compared to the wave of EVs hitting the market with longer ranges, smarter tech, and better efficiency. That's not to say the UX300E lacks appeal altogether. It still benefits from Lexus's reputation for build quality and refinement, and for city driving, its limitations aren't as pronounced. On the used market, it can even be a solid buy for someone seeking an affordable, entry-level luxury EV. Still, its resale performance underscores an important lesson. Even a brand known for long-term dependability can stumble when entering a rapidly evolving EV landscape. Number 5. Kia EV6. The Kia EV6 entered the electric vehicle arena with a splash. Its futuristic design turned heads, its long wheelbase offered a roomy interior, and its ultra-fast charging technology impressed reviewers everywhere. The EV6 showed that Kia could compete with premium brands in terms of innovation and style. Yet, even with glowing reviews, depreciation has been a hurdle. Like many EVs, the EV6 faces an uphill battle in resale value. The reason isn't quality, it's the pace of technological change. With each passing year, rivals introduce longer ranges, faster charging, and new features that quickly make even recent EVs feel dated. Buyers in the used market worry about investing in something that might be overshadowed within months. Battery longevity is another lingering concern. While Kia offers warranties, uncertainty about long-term performance keeps some shoppers cautious. That hesitation lowers demand in the used market, which in turn accelerates depreciation. For original owners, it can feel frustrating to watch a well-regarded vehicle lose value so quickly. But for second-hand buyers, the story flips. With prices falling, the EV6 becomes an accessible way to enjoy cutting-edge design and technology at a much lower entry point. In the bigger picture, the EV6 shows the challenge all EVs face today. No matter how advanced at launch, depreciation is driven more by the relentless speed of innovation than by flaws in the vehicle itself. Number 4. Toyota bZ4X. Toyota has long been the gold standard when it comes to strong resale value. From the Corolla to the Land Cruiser, its lineup is known for retaining worth over time. But with the bZ4X, Toyota stumbled. As its first dedicated electric vehicle, the bZ4X arrived with big expectations and early problems. Recalls quickly made headlines, particularly over issues with wheel hub bolts that could loosen, raising safety concerns. On top of that, the bZ4X's range numbers fell short when compared to rivals. For a market already skeptical of first-generation EVs, these challenges did not inspire confidence. As a result, depreciation set in faster than Toyota owners are used to. Data shows the bZ4X losing value at a rate closer to less established brands in the EV space, rather than following the steady, reliable path of Toyota's gasoline and hybrid models. Buyers in the used market often look elsewhere, preferring EVs with proven range and stronger early reputations. That said, there's still value in the bZ4X for the right buyer. Toyota's reputation for durability and its extensive dealer network provide reassurance, and over time, updates may help address some concerns. On the second-hand market, this means bargain opportunities are already forming. But in the bigger picture, the bZ4X serves as a reminder. Even a company with Toyota's track record can find its resale reputation tested when stepping into the fast-changing world of EVs. Number 3. Jeep Grand Cherokee. The Jeep Grand Cherokee has long been a favorite in the SUV world, blending ruggedness with a touch of luxury. It's stylish, capable off-road, and offers plenty of trims to suit different tastes. On the new car market, it continues to draw strong interest, especially when paired with incentives and lease deals. But that very popularity creates a problem once it enters the used market. Fleet sales and generous incentives flood dealerships with Grand Cherokees, and when supply outweighs demand, resale value takes a hit. Buyers suddenly have multiple options, which pushes prices down faster than owners would like. Even higher trims, which come loaded with advanced tech and luxury touches, struggle with depreciation. The reason? Shoppers worry about the long-term reliability of those complex systems once warranties expire. While the Grand Cherokee is still a solid SUV, the depreciation trend is hard to ignore. Owners looking to resell within the first few years may find the drop steeper than expected, especially compared to more value-retentive competitors. On the flip side, used buyers benefit from this pattern. With so many models hitting the market, it's easy to find a well-equipped Grand Cherokee at a fraction of the original price. For the right shopper, that creates opportunity. Still, as far as depreciation is concerned, the Grand Cherokee remains a reminder that high popularity doesn't always equal strong long-term value. Number 2. Nissan Armada. The Nissan Armada is a full-size SUV that delivers space, power, and comfort. On paper, it seems to check many of the right boxes. Its V8 engine ensures strong performance, and its cabin offers generous room for families. Yet despite these qualities, the Armada hasn't gained the same respect or desirability as its rivals. In the used market, perception matters just as much as capability. Buyers looking at full-size SUVs often gravitate toward brands with stronger reputations. Toyota with its Sequoia, Chevrolet with its Tahoe, or even Ford's Expedition. Against those names, the Armada often struggles to stand out. This perception gap plays a major role in its accelerated depreciation. Another challenge is brand image. While Nissan builds reliable vehicles in many segments, the Armada doesn't carry the same recognition as luxury competitors or even the mainstream heavyweights. Buyers often hesitate to pay a premium for a vehicle that doesn't hold the same long-term cachet. As a result, depreciation sets in quickly, making the Armada one of the less value-retentive options in the large SUV segment. However, for buyers in the used market, this opens the door to bargains. A spacious, capable SUV can be had for far less than its original price, provided buyers are comfortable with slightly higher fuel costs and a badge that doesn't carry top-tier prestige. In essence, the Armada is capable but overshadowed, a vehicle that does its job well, yet struggles to hold value over time. Number 1. GMC Yukon XL, 2022 models. The GMC Yukon XL is built for size and strength. With its extended length, it offers room for passengers, luggage, and everything in between. while its towing capabilities make it a workhorse for families and adventurers alike. On paper, the 2022 model seemed like the ultimate package. But depreciation numbers tell a more sobering story. Data shows that the 2022 Yukon XL lost an average of $7,380 per year over a 3-year span. That's a steep decline for a mainstream SUV, especially one marketed as a premium choice within the GMC lineup. Several factors feed into this trend. First, fuel consumption remains a big concern. Large SUVs with big engines simply don't align with the market's growing preference for efficiency. Rising fuel prices only magnify the issue. Competition is another hurdle. With options like the Chevrolet Suburban and Ford Expedition in the same category, the Yukon XL faces tough battles for attention. Buyers often cross-shop heavily, and when resale considerations come into play, competitors sometimes win out. Even higher trims, with luxurious interiors and advanced tech, don't escape depreciation. Used buyers worry about potential repair costs once warranties expire, and that uncertainty chips away at demand. For shoppers in the used market, however, the story flips into opportunity. Depreciation makes the Yukon XL a more accessible choice, offering size and capability at a much lower price point. Still, for original buyers, the numbers reveal a depreciation curve that's difficult to ignore. Depreciation is one of the most overlooked aspects of car ownership. While it doesn't matter to everyone, especially those planning to lease or trade frequently, it's a painful reality for buyers who expect their investment to hold steady. From exotic Italian nameplates to mainstream American family haulers, the lesson is the same. Doing research before buying can save thousands in the long run. If you found this breakdown helpful, let us know in the comments which SUV surprised you the most. Have you owned one of these models? And did you feel the sting of resale losses firsthand? We'd love to hear your story. And if you'd like to see more in-depth automotive insights like this, make sure to like this video, subscribe to the channel, and turn on notifications so you don't miss future uploads. Your support helps us continue bringing you well-researched content.